I think the first money I ever earned, if you can call it that, was climbing over a fence into a plot on Tigiri Ridge and gathering macadamia nuts and then selling them on the side of the road. I think I was about 10 years old, and I was sitting on the side of the road selling macadamia nuts to random passers-by. I've been in the real estate industry now for, wow, longer than I care to remember. I started off in the hospitality world, but very quickly moved into hospitality real estate, so hotel real estate. As a hotel broker, I was buying and selling hotels, and then started looking at more analytical consulting work to do with hotels, so feasibility studies and development programs and that sort of stuff. And then moved into more generic leadership as you can naturally progress through your career, and ended up leading the office of JLL here in the region back in the day, in 2016, 17, 18 back then. And then went up to Dubai with them, moved briefly to a smaller regional firm as a partner, and then Knight Frank came and gave me a call. The managing director who'd been here a long time, 19 years, was moving back to the UK, and they wanted somebody to replace him, and so they came a calling. So I've been at Knight Frank now about a year and a half, and so far so good.
Interesting. Yeah, speaking of Knight Frank, sure that they lead in sort of real estate partner in the region, and we want to discuss briefly about the state of commercial real estate in the region. From 2020, we saw an increase in the number of vacant office space, not just in Kenya, but across major cities. And the main reason was that employers were opting as a way to save, and so that their people could work remotely. I mean, from where you sit, do you see this trend going forward, and what's the implication on the local economy?
Yeah, I think what we've seen is an evolution of the market, which is only natural, into more flexible work solutions, flexible office space. We had players in the market for the last almost 10 years, I guess, in with the likes of Regis and Nairobi Garage and those guys. Now we're seeing it become a little bit more formal, and there's more diversity. In developed markets, it's very common to have a decent proportion of the office space being flex. And it offers, I think in Nairobi particularly, it offers international occupiers who are not yet either sure how much they're going to allocate to the market, how much investment they're going to put into the market. It allows them to get a foothold, analyze the market, understand how many staff they're going to need, understand where they want to be, whether they want to build their own office, whether they want to occupy a big office, because committing to a 5-6 year lease, lease is just less than 6 years, investing the money that you'd invest if you're a typical global firm in a fit out to a branded spec is big money. So if they have the option to come here with 5-10 people for 6 months to a year without committing to a longer lease and analyze the market, see what the potential is, that's really great for them, and it really encourages those guys to take a look at the market. If we were insisting that they come and they sign a 6-year lease and they spend $1 million fitting out, a lot more people would be nervous about coming into the market. I think it would just take a little bit longer to make that decision. So we're seeing a lot of that happen. And I think the other side to that is it encourages startups and people who work remotely to come into the market, because you have options like the Ikigais of this world, or Workables, or whatever it is, where you can go and rent a desk or 2 desks and work remotely from there, and you don't have to, if you're only a 2-3 person company working in whatever space it is, you don't have to commit significant amounts of your resources to signing a long lease. It's a lot of risk. If your business doesn't work out as an entrepreneur in 12 months time and you've got a 5-year lease that you're tied to, it's tough.
Interesting. Most recently, we've seen downward price corrections, particularly in on the residential side of the real estate market locally. I mean, what should a kind of investor know or understand from some of these corrections? And specifically, what sort of opportunities does this leave on the table for individuals looking to acquire, say, residential properties?
It's a good question. I think in the resi space, we've seen a rental correction on some properties downwards, particularly older stock properties, because there's a lot of new properties that have come into the market, townhousey stuff, apartments, and that's put pressure on the older stock to lower their rents given the amount of supply, right? It's a supply and demand thing. So we've done that with some of our properties and we've seen really good responses. So it's that age-old, where is the right price to ensure the correct occupancy? You control the pricing, occupancy responds to the pricing, the market responds to what price you set. So you can set the rent extremely high, your occupancy will be very low. If you drop the rent a bit, your occupancy goes up, and it's finding that balance of, it's a sweet spot, and it's an art and a science, and very few people get it right. In terms of the buying and selling, the actual acquisition market, pricing is variable. I think it's fair to say that some pricing has fallen, but there we have a strong demand for certain luxury resi products, particularly the coast and upcountry. There's a lot of foreign money looking at those properties, the leisure holiday home type market, very strong. In the apartment space, again, there's been a huge supply glut, but a lot of the expats in the market that I've spoken to are looking at buy-to-rent options that people didn't used to do in the past. So, historically, very few people in Nairobi would buy an apartment and rent it out. They would they'd live in it. And in fact, historically, not that many people bought apartments. They would buy a house, or they'd buy a plot of land and build a house. So we're now seeing the market again evolve, much like in the commercial space, to where we have a more mature market dynamic where you have people buying as an investment. So I know a few people who bought 2 or 3 apartments that they're just renting out as an investment. So it's an interesting time. I think part of the reason it's been difficult for a lot of local Kenyans to invest in that market is the mortgage situation. We really struggled with our mortgage market with interest rates going where they're going now. They're not really helping. So it's a nut that still needs to be cracked. But if you're cash rich and you have lots of money sitting around, it's a great opportunity to buy apartments to rent, and buy-to-rent market. It's really hot right now.
Interesting. Speaking of the buy-to-rent option, we've seen most people now opt to buy them, put them on the Airbnb, which have become a very significant model for most people.
Sure.
From where you sit, given the rising of Airbnb and such platforms in Nairobi and across most major cities, how has this sort of model disrupted real estate, particularly in Nairobi? And what should, say, a real estate investor know about the role of the Nairobi real estate housing market?
Airbnb is a very interesting subject matter. I remember when it was first started and people thought, particularly the hotel industry, and I was working in hotel real estate at the time, the hoteliers thought this is going to be short-lived, or it'll never be as big as they want to be, and it actually ended up being bigger. It serves a very niche purpose. In Nairobi itself, Airbnb is a fantastic city break product. It's a family or a couple going to a city for a few days or a week. They want their freedom. They don't necessarily want to be with hotels. They don't necessarily want to pay as much as a hotel. They don't feel like they need as much service. And so they will, take an apartment and live a little bit more of a kind of typical homely life in that city and really experience the city. Nairobi hasn't really been a city break market. It used to be very transient for our tourists. So they would either come here for business, and it's a single business traveler, and they would be here for 2-3 days and they'd leave again. Or it was 2 weeks of school holidays, an entire family, but they would largely go on safari and go to the beach. So they wouldn't spend much time in Nairobi. They'd land, they'd spend a night, they'd get on the flight tomorrow, the next day, and would jump in a car to Sava, whatever it was, and that'd be the last time they'd see Nairobi. And then they'd fly back, and then they'd jump on the overnight flight back to Europe. So Nairobi's becoming a bit more of a city break market, not just for international tourists, or should I say global tourists, but we're getting a lot more regional leisure travelers and even domestic leisure travelers wanting to take staycations and spend time in the city and do something a bit different. So if you look at the peripheral area around Nairobi, Champagne Ridge is a good example. There's some really good Airbnb options up at Champagne Ridge where Nairobians can say, I'm going to just pop out of town, and it's almost still Nairobi, for the weekend, and we'll go to another side, go to Karen for an Airbnb, or come to this side for an Airbnb. So that's happening more and more. The other side of it, obviously, is as a homeowner, it's an opportunity to make good revenue out of your house. I think the trade-off there, a bit like the occupancy discussion we had earlier, is yes, you get a high amount of money per day for your property, but these are short-term lets. So do you take somebody who's going to sign a 1-year lease, a renewable 1-year lease, and move in there with their family long-term, or do you take somebody who's coming for 2-3 days and then have to find somebody to take it after that, have to find somebody? So there's a lot more work that goes into Airbnb than signing a lease with a long-term tenant, but the return is slightly higher. So it's that trade-off of occupancy versus pricing it. There are people out there, and there's a few companies out there who are now effectively becoming Airbnb agents or management teams. So they'll lease apartments off landlords and then effectively put them on Airbnb and take care of all the management and offer all sorts of ancillary services, be it housekeeping, delivering food, etc., etc. So again, it's a maturation of the market, and I think it's great. The more of this sort of stuff we see that happens in the developed world, it's only a positive thing.
Interesting. Yeah, speaking of the luxury side of the market, Knight Frank has been leading an array of high-profile projects in Nairobi. Before we go into some of those projects, I'm just curious to which one has caught your attention?
I mean, to be honest with you, I'm actually quite excited about some of the commercial stuff we've seen happen here. You know, historically, our office buildings weren't really built. They were built on a budget, but people wanted to build them as cheaply as possible and then secure as much rent as they could for the quality of product that they built. Now we're seeing international occupiers demanding globally, and these kind of blanket global emission statements that are coming out, particularly around ESG, saying that buildings need to be certified to XYZ quality level from a green perspective or an efficiency perspective or whatever it is, security, however. And that's now influencing the way that our developers are building buildings. So we're seeing really exciting new office buildings coming out of the ground that are, you know, maybe not LEED certified, but very high green certifications. They've thought about the glazing and the energy efficiencies. They've thought about the flow of people. They've thought about all that kind of stuff, which is stuff that, 10 years ago, very few people were actually building buildings like that. So the commercial space is really exciting. I think residential, my biggest concern with the residential is the amount of high density multifamily residential we're seeing coming out of the ground. And I haven't seen much of a coherent plan around the urban planning that goes with that. And I've seen it from other parts of the world where you build a lot of apartments very quickly without thinking about the support infrastructure that's needed. And that's not just roads and traffic, but that's, sewage systems and power and all the rest of it. And so I'm a little bit nervous about that. While some of the product is fantastic, I'm just a bit nervous about whether or not our infrastructure is going to support this massive boom in residential we're seeing.
Look, interesting. Looking at the commercial side, Knight Frank is currently the listing agent for GTC Office Tower, which is arguably the second largest, one of the tallest in Nairobi. And this has become a recognized sort of point in Nairobi skyline. Tell us, a little bit about the tower and what this means for the local economy, and as the completion of this project moves closer to completion.
I'm a big fan of GTC. It's divided the market. A lot of people I speak to are not sure about it. They say, well, that's not what Nairobi's about. It's not a Nairobi product. Nairobi's about low rise, greenery, being close to nature, and that's what corporate occupiers want. It's the first project of its type in Nairobi. Obviously, we have the Britam Towers and UAPs and all those kind of guys in One Africa that are big, shiny office buildings. But GTC really is an ecosystem. They've got the hotel, the conference center, the retail, the residential, obviously tons of parking, and then the office as well. So it's a Dubai-esque project or a Santon City-esque project in South Africa where you have this kind of ecosystem that is self-supporting. So, you know, if you imagine the apartments are 90% leased, the hotel is running at a good occupancy level, all the retail is let, and then the office building is well let, it'll all, you know, work symbiotically. You know, the office workers, in theory, a lot of them will be living in the residential, a lot of their clients and visiting people will be staying in the hotel, they'll be hosting events there, the convenience retail will be serving the apartments as well as the office building. So it's an exciting project because I think it's very daring. Obviously, they have the financial muscle to have pulled off a project like this because it's a serious investment to have done what they've done. And it's encouraging that they chose Nairobi to do it. But I think it's an exciting project because it shows what it will show, that the market's ready for those sorts of big projects and we'll be able to occupy it and it'll do quite well. I think it's part of our evolution as a city that those sorts of projects come in. It's only natural. And we are an interesting city because we have this connection to nature. We have the green belt and we have Karura and we have all these things that keep us quite a green city. And there are occupiers who like low-rise office buildings or office parks attached to nature. But at the same time, we are a global, at least a regional financial hub and a big hub for Africa. So we need these grade A international spec office towers to service the tenants that want that super product. So I'm a big fan of GTC, and I think it's going to do well. It's going to take some time to fill it up, if I'm being honest. I mean, it's a lot of real estate. Close to 700,000 square feet of office is a big chunk of office, but we're working well. We've got quite a few tenants already signed up. So yeah, it's really
interesting. As we come to the end of this, like, you know, when someone comes to Nice Frank looking either for a home or office space, what are the first things that you try to find out about the client before, say, scheduling showings or 12?
Yeah, I mean, that's a really relevant discussion at the moment because we as Knight Frank are a global firm. We hold ourselves to some pretty high standards that internationally are necessary, but locally in this part of the world, people are a little bit more laid back about. But, you know, for example, we do extensive due diligence on the background of the client vis-a-vis their ultimate beneficiaries, their anti-money laundering credentials, just to ensure that we've done our KYC and we're not linking up partners that aren't suitable and we're not encouraging the perpetuation of illegal, illicit, you know, money laundering and things like that. So we do background checks extensively with any client that we're linking up with a potential seller or landlord. And also I think it's really important to understand their criteria and their requirements. You know, we have a pretty detailed list of questions that we ask either residentially or from an office perspective, because we're not in the business of wasting time, ours or theirs, you know. And so it's, you know, we need to understand, you, Eric, you're looking for an office, how many staff are you looking to put in there, over what period of time, how is that business going to evolve, what do you need to be within close proximity to, what's your budget, what other services do you need nearby, are you interested in, you know, connections to whatever it is. And so once we've understood all of that, we can then narrow down which locations work best for you and then show you the options in those locations. But if we just sort of say, if you come in and say, I'm looking for an office, and we say, great, get in the car and start traveling around random office buildings, we're wasting lots of time. And the same is true for residential, right? Do you need to be close to schools? Do you need to be close to family, relatives? Do you want to be closer to the airport? Whatever it is.
Interesting. Yeah. So we're going to the next set of final questions, very brief, short, but basically designed to get our readers interested in the interview.
Good luck for that.
Yeah. So the first one is, when you first started your career, what did you spend your first salary check on?
It's a good question because I'm not really sure when I started my career. I think the first money I ever earned, if you can call it that, was climbing over a fence into a plot on Tigiri Ridge and gathering macadamia nuts and then selling them on the side of the road. I think I was about 10 years old, and I was sitting on the side of the road selling macadamia nuts to random passers-by. I think it was like $2 a bag back then. So I think that was probably the first money I earned, but I'm pretty sure I spent that on Big G. Subsequently, my first real job was in the school holidays. I worked as a general kind of helper in one of my uncle's restaurants, just in the kitchen, making trouble probably more than anything, but I think I was trying to help out and clean and wash and cook a little bit. And that money, I'm pretty sure that went towards kind of the typical thing that 16-year-old boys spend money on, which is probably, again, more snacks than anything else. In London, when I got my first real job, my money went entirely to rent. I was on a very, very poor salary. I was genuinely struggling to eat with the cost of everything in London. Rent and transport was not a joke. So I spent the first year working very hard to get my incentives. I was on a very low salary with a very high incentive, provided I performed, and so I spent a lot of time working hard to try and achieve those incentives. But the first year I lived in London, I didn't make a lot of money, so it was pretty tough. It was mainly rent and transport, and the occasional beer.
Interesting. You've been in the African real estate for many years, and you've seen it change considerably by region, government, climate, and everything in between. Is there a particular trend you're watching closely that you believe will define the real estate industry in Kenya?
So, obviously, I'm a Kenyan, but I left and was fortunate enough to work abroad in multiple markets, which gave me fantastic experiences, not just professionally, but personally. It grew me as a human being. And I always wanted to come back home and try and transfer some of that knowledge gained overseas. I think there's almost an obligation for those of us who are fortunate enough to go and work and learn overseas to come back here and transfer some of that knowledge. What I've seen I was in Dubai before I moved here, and I think that's a fantastic case study on how to do things, particularly around real estate, let's say, but in many different facets of government. The way that they've structured that economy has been really interesting to watch, and has really worked for them. I mean, the markets explode, and our office in Dubai just keeps growing. They can't hire people fast enough, and I think it's creating that environment where the private sector can thrive without too much inefficiency or hindrance from the public sector. Your question was about Africa. Africa's a big place. Compared to our neighbors across the continent, I don't just mean Uganda, Tanzania, and the rest of them, we do a really good job. Can we do better? Of course, we always can. Governing a country is very difficult. Again, it's about finding that balance between, allowing people to do things and ensuring that you're collecting taxes. But, I think visas are a big way of allowing foreigners to come in and invest and set up businesses. Ease of doing business is really key to helping an economy grow. And that, of course, has a knock-on effect to real estate. So, real estate is one of the cornerstones of an economy. I think infrastructure, particularly airlift, the political and economic environment and the real estate sector are really closely tied to each other. So I think if we can create an environment, and we've been trying, where we incentivize businesses to come to Kenya, set up in Kenya, that then just has a knock-on effect. So ease of doing pretty much anything to do with the public sector, the easier it is, the more likely you'll see the private sector respond. A lot of people I know who've come into the African market, not just Kenya, but in other African markets, and have spent a year or two trying to set up a business and establish a business, have eventually given up and said, I'm going to go and just set my business up in the UAE because I don't pay any serious tax there. They'll give me a visa in 10 minutes. It's totally transparent. And then I can fly out of Africa. And so some of those countries that I've seen people leave from, I feel a bit sad for, because I'm like, well, if they'd only just created an environment where that business could have, then they wouldn't miss out on those benefits of having businesses in that market. We're doing a great job, and you can tell because of the amount of startups that I was talking about earlier that are taking up all these flex office spaces. You know, you go to any cafe in Nairobi, you'll see a bunch of expats sitting there with their laptops working, you know, thinking about the region as a whole, so based out of Nairobi. But we can always do better.
Interesting. What's your favorite part about living in Kenya?
It's I'm a biased opinion, and I'm a glass half full kind of person. So there's benefits to living everywhere, and obviously the place is amazing. But I think ultimately it's the people. You know, even when I moved here to start with Knight Frank, I met the senior team, but I was a little bit nervous about meeting the rest of the business, right? Because we have triple figures numbers of staff here, and I've met 12, 13 of them over Zoom, you know, who are my HODs. And it's one thing, the senior staff, but it's another thing that the people that do most of the work. And I was really relieved and reminded of how amazing we are as Kenyans in terms of our positivity and our can-do attitude and our sense of fun. When I joined and I spent some time with the more junior staff, and I realized these are really great people with really high potential. And that's the most exciting thing for me about Kenya, is that our people are great. And that's another big reason why foreign companies want to come here, is we have this amazing workforce. You know, most of our neighbors have their own quirks. We have ours, but ultimately we're, you know, if you talk to any tourist who's been to Kenya, and I've spoken to many when I lived overseas, because whenever I'd say I'm from Kenya, they'd be like, I went on holiday to Kenya. And they would all say, we love the people, you know, happy, positive, fun people.
Okay. Just if you're starting out your career today, where would you invest your time and effort?
I've thought about that a lot over the years, and it moves. A few years ago, I probably would have said Mandarin, learn Chinese, but Mandarin specifically. I think languages is a big one. So speaking as many foreign languages, if you want to call them that, as possible, but just languages generally. And then financial acumen, really valuable. And honing, and this is where I've benefited from working in so many diverse markets with so many diverse people, but honing your EQ, you know, your ability to connect with people, understand people, build empathy for different people's situations. There's a famous saying, I can't remember exactly how it goes, that everybody's fighting the struggle that you know nothing about, right? And I think that's true to an extent, but a lot of people don't think about that. So if I see somebody who's not doing very well, my default is not, they're not performing because they're bad at their job. It's what's behind this? Why? What's going on, right? Is it simply because they're in the wrong place and they're struggling academically with this situation, or is there something else deeper going on? So I think that's something I've learned on the job over the years, but I think it's something that'd be really valuable to learn at a younger age. It's a leadership trait that I certainly look for in young leaders, and I know that employers look for as well. So it's really valuable.
Okay.